This is strategic living. Transcript for Session 5. Discovering New Institutions. SFP. Growing Your Wealth. The third element. This course is placing you on the launching pad for real, enduring prosperity. You have experienced that this course demonstrates exceptional, inexpensive methods for enhancing your financial productivity and prosperity, even if you are already wealthy. This fifth session, Discovering New Institutions, Strategic Financial Planning, Growing Your Wealth, builds on your protection against loss of income and develops your protection against financial losses due to poor health. Your fifth step to reach your financial prosperity goals. Would eliminating losses help you reach your financial prosperity goals? Your fifth step is to develop an additional six-figure income. Strategic financial planning is about acknowledging the basic facts of the statutory categories of retirement vehicles and implementing the most effective strategy to generate permanently risk-free, tax-free compound interest. Understanding the reality of permanently risk-free, tax-free compound interest-bearing retirement wealth vehicles motivates the individual in implementing a personal strategic financial plan. Understanding the fact that permanently risk-free, tax-free compound interest-bearing retirement wealth vehicles have been available to the public since the mid-90s reassures the individual in implementing a personal strategic financial plan. What if you do not want to retire? What if you have a great savings plan already? That is very good. Most, if not all people, hope for the best for their golden years, and they deserve credit for their positive attitude, and you deserve credit for yours. However, even if you really love what you do to earn money, it is not realistic to expect to continue working endlessly. And even the best bank savings or direct investment plan may not in fact be adequate for retirement. Wanting to keep working is great, but the simple fact is that positive attitudes, though valuable, cannot prevent health issues from eventually taking control of people's lives. And even if not, other circumstances beyond their control tend to put them out to pasture whether they want to be there or not. In any case, even the most independent individuals tend to need all the help they can get as they get older, making it the course of wisdom to take advantage of available help and planning strategies well ahead of time. Moreover, if the desire to keep working is in fact due to procrastination instead of implementation, it is absolutely essential to make realistic plans as far in advance as possible. Procrastination is devastating to your financial prosperity, and it is just too late to do anything about it when you are suddenly out of time, out of energy, and struggling to survive on government welfare benefits. Besides, the right retirement vehicle gives you more options and better features and benefits, and even gets better government treatment than even the best bank savings or direct investment plan, which may or may not beat inflation. It is simply better to have options and enough money than no options and not enough money. As demonstrated by the article excerpt accompanying the fourth session, you will need 7 figures, which is increasingly difficult, if not impossible, to achieve by procrastinating. As Robert Berger states in the article accompanying this session, delaying retirement savings by even a few years can significantly reduce your savings decades later. An objective approach will help you keep your senses and not reason that all it takes is a few years' savings once you are debt-free. That is, it is essential that you accumulate wealth for retirement over the entire time that you also eliminate debt. Can you implement strategic financial planning on your own? Unlike strategic tax planning and strategic legal planning, which you can implement on your own, implementing strategic financial planning requires that you consult with a licensed professional, since retirement vehicles are heavily regulated by the government and available to you only through such a licensed professional. Once you have established a wealth account by means of a retirement vehicle, not exposing the fact that you have done so is an exercise of your right to privacy. The actual language of applicable law does not make your wealth account subject to levy or seizure, but it is simply best to keep its very existence private. Distributions from the right type of properly managed wealth accounts are not even reported to the IRS. Recycled tax and interest costs. Can you truly recycle your tax costs? Applying the recommendations already discussed, you have already realized at least 8 additional streams of income. By organizing a business in your state, you have lawfully avoided self-employment tax, which is currently just over a net 14% of the profits of a sole proprietorship, an unincorporated business owned by an individual, and begun to establish the legal basis for minimizing the appearance that you have various tax liabilities that are not established by the actual language of the law. By obtaining membership in at least one private, lawfully income tax-free organization and contracting for your business revenue, you have lawfully avoided state and federal income taxes, which are currently between 10 and slightly less than 40% of your federal net taxable income, plus any additional amount charged on state net taxable income. State and federal unemployment taxes, which together are currently just over 6% of the first $7,000 of wages per employee per year for federal unemployment tax, plus any additional tax charged on the same or additional wages for state unemployment tax, up to specific wage limits. Federal Social Security and Medicare taxes, which together are currently over 7% of gross wages paid just to yourself, up to specific wage limits, and federal Social Security and Medicare taxes, which together are currently over 7% of gross wages paid to yourself and to others, up to specific wage limits. By recognizing the enormous cost of interest without a plan to avoid it, you have begun a focused effort to reduce your cost of interest and any other unnecessary or excessive costs. Just as taxes and interest flow away from you in streams, which you need periodically to analyze to determine the specific amounts, saved or retained taxes and interest effectively flow toward you in streams, which you need periodically to analyze to determine the specific amounts. Just as you may not notice the great outflow of taxes and interest without periodically analyzing it, if you simply start using saved or retained taxes and interest for your present lifestyle, you may not notice the effective great inflow of taxes and interest without periodically analyzing it.